GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. Well, it's coming off the back of the busiest week in Forex markets that I can remember for some time. Major currencies getting absolutely smashed, gold getting crushed, silver getting crushed, the stock market turning lower, Bitcoin having a rough weekend, all thanks to a lot of strength in the US dollar because of that surprise hawkish Fed meeting. Actually, I think last week we called it pretty well. We were talking about signs of weakness in these major currency pairs and the chance that the pullback was going to be deeper. But I have to be clear, we did not expect the extent of those moves. We were expecting buy opportunities at deeper correction levels, but these trends have reversed. So let's have a look at this in more detail. Any questions that you have, please drop a comment in the video. That's always interesting. Otherwise, if you're just enjoying the video, click that like button, please. That really does help. Let's start with the euro, of course. Now, here's our 4-hour chart, and you can see the absolute devastation that happened last week here. Clearly, we've been in an uptrend for a while in the euro, but as we discussed last week, lower highs were being made, lows were being taken out, and if I put it back on the screen, let's go for... We were talking last week, if you remember, in terms of RSIs, and we were just talking about the fact that the euro had been tagging the oversold level and it had been way off the overbought level for a while. So the last time it was overbought was up at the highs and it had just been trending lower, and then last week we really snapped into oversold territory and we remain there right now. Slight signs of a kind of possible reversal off the lows here, and you would expect some sort of bounce. But I'm not sure this is a time to be positioning for a major recovery. Probably this first supply area could just be enough to see the market roll over again. If we can get through there, then I'll be looking at this previous low, which you can see on the way down, worked for 4 hours, and then just the price collapsed again. So this is the extent of the demand in the market. One little candle and then just collapse. Maybe more demand is coming in now. I think the way things are going to pan out is that Monday is a day of waiting and maybe a little bit more spooked moves from last week. And Tuesday, when we hear from Fed Chair Jerome Powell, when he's testifying to Congress, is when he'll have an opportunity to clarify what the Fed meant when they predicted 2 rate hikes in 2023, much earlier than previously had been forecasted, and hence the strength in the dollar. So this is the state of play. It's flipped very bearish, but of course, with steep declines, you can get sharp snapbacks, depending, I think, a lot on what the Fed chair says. But I am certainly more minded towards selling this currency pair now than I have been for a while. And something else to note, just on a weekly chart, does look like potentially we're in the midst of a head and shoulders pattern here. Left shoulder, head, right shoulder. For this pattern to complete, we'd need the neckline to break lower, and that would suggest, this kind of it would be something, if we were to believe the price objective of the pattern. This is obviously a bit rough. You want to calculate this a bit more specifically, but we'd be looking to declines to these kinds of levels. What would that be? About 111 or so. 111. Down towards this little supply area down here, and these former highs where we had the false break, the pandemic craziness, and then we broke through again and trended higher. I mean, we could potentially reverse all these big euro gains, which would be very interesting, and would put this whole situation is questioning the kind of whole bullish euro thesis, because we've not even taken out this high. So is this process, all of this, since 2015, is this a bottoming in the euro? It was actually just a consolidation before a further collapse in the euro, and it heads below 104 and goes down towards parity. This is really interesting stuff. That's a bit longer term consideration, obviously, but if we did get a breakdown of this pattern, we'd start to think, we'd have to start thinking about that, whether we want to be buying euros at all over the next few months. Anyway, that's the short-term picture, and the long-term picture is turning decidedly more negative on the euro. But let's look for some kind of sharp recovery. Maybe the Fed decide they have to walk back this hawkishness from the meeting. Maybe they feel they overplayed their hand and that they have to reassure the markets. And I think that's a distinct possibility. And if that is the case, we could get some very quick moves back in the other direction. So let's see. And again, this is great for trading because this is volatility in the markets. This is what you want. When you buy at a support level, you want the price to rocket higher. When you sell at a resistance, you want the price to collapse. And so this is what we're getting at the moment, which is great. Okay, moving on to the British pound. Equally, this had been the stronger of the two European majors. But as you can see, the pound had been holding above the oversold area and hadn't gone oversold before last week's sell-off. But now it is oversold. It's actually come out of oversold territory just about as we speak. But still, same kind of idea, I think. This is a 4-hour candlestick chart. I would say that we're bouncing off the current area, but really, if I had a little shape on the chart here, we're looking to, I think it's optimistic to think we can even get back up to this 139 supply area. Again, depending on what's said by, there's lots of central bank officials speaking even before Jay Powell. There's a few on Monday. So if I can scroll this thing forward a little bit. You can see this is where we got the bounce. It might even just come down to the bottom of this this supply area here. It could be something more like what we've done here is because the declines were so sharp. Oftentimes I'll look to the 4-hour chart for these demand and supply areas, but when it declines that sharp, you really have to go lower time frame. And so what I could be looking at is something more like a bounce to here. So if this is a little tiny triple bottom, if you're trading these hourly charts and below, might get a bounce up towards just almost precisely the 39 handle and then roll over from there. Again, to me, this is very much a downtrend. I think it's way too early to try and call some kind of bottom. Although we are in volatile markets, I'd still be inclined to be looking towards the selling opportunities in this currency pair as well. Right, let's have a look at, getting ahead of myself, let's have a look at dollar yen. This was interesting because dollar yen, always a kind of a trickier one to play from the idea that last week was very much about dollar weakness, but because everybody got so spooked about the Fed and what caused that. Did I say dollar weakness? I meant dollar strength. What caused, everybody got spooked in response to that dollar strength caused by the Fed. And so in terms of the dollar-yen currency pair, the yen is actually the greater haven. So actually there was some inflows into the yen and out of the dollar because people were scared. So it's the direction of this market actually still remains kind of bullish, and this is probably the one place where the demand area actually that we highlighted last week actually played out. So I think really the play here is still assuming dollar strength, assuming this uptrend, but just watching this rising trend line like a hawk, watching this RSI support. If that gives way, then I think we see some pretty quick moves to the downside in dollar yen. As I say, it's going to be limited insofar as we're in a kind of dollar strength market. What would be interesting is if we do get the Fed walking back some of their comments a bit, and weakness in other parts of the market, weakness in the dollar in other currency pairs, it will be interesting to see what dollar yen does, whether it holds above this rising trend line or not. So this is one of the more trickier ones to play, even though the trend is kind of in place from before, as the other ones, the trends have all broken. yeah, it's a bit of a kind of choppier trend, but I think for the moment we're assuming we get a retest to the highs until this trend line is broken. We're assuming more strength in this market. So let's move over to the precious metals, where we did see some pretty gigantic moves last week. We had talked about the potential for a retracement down to these Fibonacci levels, and you can see it's actually the 50 didn't work at all. Just the price fell straight through it, even though it was supported by these previous highs over there. That just shows how weak the market was, just flushed straight through it. Maybe we can find a reaction on the hourly chart. Oh, I don't know what I'm looking at now. It seems to be not. Oh, okay, that doesn't look right. Let's carry on looking at the 4 hour. So as I say, the 50 didn't work. It only worked when we actually got a bounce off the 61.8 up to the 50 again, and then we rolled over. So for the time being, this demand area is working. But again, like the other major currency pairs, it's hard to know how long that can work. Because look at this situation. We were in an overall choppy downtrend. We had a really good rally up through May and June, but we didn't. We took out this high, this little interim high down here, and that was a good sign. But we didn't take out these highs. We didn't even get close, really. So, you know, even if you're drawing a trend line through these highs, you could maybe draw it through the closing levels, and even then, we just didn't even get to it. We basically got to. I think I drew this in before, and at this point, it's a bit of a moot point. The trade has already taken place, but still, we basically just didn't really get to where we needed to even challenge those supply areas. So gold looking very soft here, and I think also naturally the market was edging its way up to these levels, and just the shock at the Fed meeting, we didn't even get there, and the market's caught off guard and rolled over. So this looks pretty weak to me, this market. I think we've clearly broken. If you were bullish because of these rising prices here, well, they're not rising anymore. We've seen a drastic lower low, and you never can quite pinpoint how big the bounce will be, and even if there will be one, obviously that's the art of swing trading. I would imagine we don't get much further beyond the 50% retracement. But if we do, if the Fed do confuse things a bit, or Jay Powell confuses things a bit with his testimony this week, then we can look for levels, into the decline. And maybe just last week's was just a tantrum, and we can actually reverse the entire tantrum. I mean, that is possible. In which case, we basically just assume a sideways market rather than a very bearish market that we are at the moment. A lot of activity from MetaTrader at the moment. Okay, so switching gears to the silver market. You can see that the levels that we highlighted before, we said we were watching this area of support, and when that really gave way, you can see we'd struggled to even hold 27, and we just collapsed all the way back down to really solid long-term support down here, which is around the 25.50 level. But again, like we'd highlighted last week, this was a kind of dodgy looking move. We'd been above the moving average, and we'd been above the well out of oversold territory for a while, and then we dropped through, and this was our warning sign, this move here, and we bounced back, and then we topped out. We couldn't break through the highs, and we talked about all this last week, but obviously we didn't predict we'd drop so quickly. But the signs were there, the weakness was creeping in, and then finally, last week was the big break. And none of these interim levels held, and we're right down at this level now. And, it's entirely feasible that we go lower. This is the broader context. Just looking at this daily chart for silver, not a good sign. Similar to we were talking about with gold, the fact that we didn't test the early year highs, the January highs, not a good sign. You at least want to have tested the top of the range, but we didn't get to the top of the range. Now we're heading down towards the bottom of the range. So again, looking a bit soft now in silver. And so, interestingly, on a daily basis, we're not oversold yet. So chance for a recovery, that will be when we really know we're in trouble, is when we get oversold on the daily, because that hasn't been the case since this first pullback and we first started range trading. So in terms of levels to trade, not so clear from this bounce. Again, the situation of like having to go really to the hourly chart to find the areas where there was some trading activity that paused the decline. We could get up as high as this. It's about 26.70. That would be a decent sized bounce. Again, probably premised on some sort of walking back of the Fed's hawkishness, either by some of the early speakers or by Jay Powell himself. You can see that we got as high as the chart's only just adjusting itself. It looks like we want to just take out this low again, but let's see. We might get a slightly bigger bounce up to these levels or past here. I'll be looking for the first opportunity around those levels, but there's a lot of action in here as well, which is right on that 27 mark. So if you say we bottomed at 25.50, we've got a rally up $1 already up to 26.50. If you're looking for a bit of a bottoming pattern, it would be quite reasonable to expect us to be able to get up to 27. But 27.50 again, that would be a kind of retracement of the entire wobble. So maybe it was just a big overreaction from the market, and in which case we just reverse the whole thing this week. Really wouldn't be surprised to see that, but I won't be assuming that. I'll be assuming there are sell opportunities before we do the complete reversal. Now have a look at WTI. This has actually held up better than most markets. Still technically in an uptrend, I would say. But you remember last week we talked about how WTI has been very strong and it's just been contained above the 50 level. You can actually draw the 50 horizontal level. I mean, I don't tend to do that. But you can see it was contained above 50. And then last week, when everything else completely tanked, oil just dropped below this rising trend line, which I think there's a few lows below it, but I think it captures the opens and the closes pretty well and corresponds to the 50 level in the RSI. We've got to drop below that. Now we're retesting it. I'm assuming that maybe we can even retest the highs around that kind of just short of 73. But I'm thinking it looks like to me looks like the first sign of a topping process. We've broken the rising trend line. We're getting the bounce back, but I think we're probably going to roll over again just for a deeper correction and probably not go oversold, but head back to 70, or if we break 70 I would say down towards 68. And this sort of demand area down here. And if the market is going to maintain its uptrend, we want to really hold above this clear area of resistance before, but maybe we do test it again as support first. Okay, moving on to stock indices. We did see some pretty sharp moves, especially it was almost a delayed reaction. We did have a sell-off on Thursday, then we got a bounce back. So it's interesting in terms of the timing with these the Fed meetings. They tend to happen kind of in the afternoon. So then there was a bit of a wobble, then there was a bit of a bounce, and then Friday we just collapsed, but not as drastically as you can see as some of these currency pairs. But we did trade to the lowest in the S&P 500. The lowest since May 20th, so the lowest in a month. We made monthly lows, 1 month lows. So clearly, the bias of the market has changed a bit, and this line up here is kind of what I'm interested in. Is this a false breakout? It very much looks like it. If we flip to the daily chart, oh, that doesn't look too good. Let's zoom in a bit. So this was the first pullback that we had in May. We rallied up, break to the top side, only lasted for 1 day, and then we rolled over to the downside. That looks like basically a double top, a fake out above the old high and then roll over. So I think, my assumption is that we come down and challenge these lows for May. It hinges on what Jay Powell says this week. Maybe this was just a wobble from the highs and we go up and we start trending higher again. It's been a bullish market for a while, but that's not to say there aren't periods of corrections. So I think after last week's moves, I'm still, again, even in stocks, I'm looking for selling opportunities. It's maybe not quite as clear cut as the currencies though. And last but not least, Bitcoin. To me, this doesn't look so good. I think that we're into opportunity territory here. And I drew this line on just to show that RSI potentially, price has held above the low, but RSI has made a fresh low. So that's not bullish divergence. That's another technique in RSI known as a positive reversal. So as in the price seems to be reversing and showing strength despite weak momentum. So the price looks good despite a weak momentum, generally shows a strong price that may be trying to bottom here. But I think, I had this trend line in. I think a lot of people did, gapped higher, tried to get through 40K and just couldn't do it and has rolled over. The fact that we couldn't take out 40K, I'm not convinced huge swathes of buyers are going to come in at 30K again. I suspect we trade below 30K because the market's just turned very, very bearish. But if we do get some strong reversals, either from current levels with this positive reversal, or a dip through down to test these lows at 30K and then a strong reversal after that, okay, so then we can start thinking about a bottom. But to me, this looks like a failed break to the upside through 40K and subsequent weakness that we probably want to just sell into rather than look for a bottom. All right, that's it. Thank you very much for watching, everyone. Good luck trading this week. I think it promises to be another interesting one in Forex markets especially, which is great. Thank you for watching, and if you enjoy these videos, make sure to subscribe to the channel so you don't miss next week's. Thank you.